Hi, hello everyone, this is UPSC Videos and I'm Karthik. The first subject we'll be looking into is economy. So let us look into the syllabus. Economy is given under General Studies Paper 3 under the heading Economic Development. So here it is. Topics which specifies economies are till investment models. So let us look into those topics as fast as we can. So Indian economy and issues relating to planning mobilization of resource growth, development and employment. Then we have inclusive growth, then government budgeting. Then we also have agriculture. Agriculture is part of economy. Then we have land reforms in India. Then we have effects of liberalization on the economy, changes in industrial policy and their effects on industrial growth. Then we have infrastructure like energy, sports, roads, airports, railways, etc. Then we also have investment models. So these are the topics which are given under economy. From what I have understood, economy is easy to understand when it is divided into pillars and sections and then into chapters. So let us look into it in that way. So these are the pillars of economy, and parallel to it we have the chapters which comes under those pillars. So the first pillar is banking and finance. Under banking and finance we have RBI, then structure of banking, monetary policy, financial inclusions, capital market, money market, terms related to banking, inflation and insurance sectors. Just like banking and finance, we have other pillars in economy like public finance, external sector, international institutions, government's initiatives and policies, and core concepts. So parallelly, we also have the chapters which comes under those pillars. We will be covering all those pillars one by one in the upcoming videos. The first pillar we are going to see is banking and finance, and in banking and finance we will be studying RBI as our first chapter. So let us look into RBI, Reserve Bank of India. RBI. RBI was established by RBI Act of 1934 in the year 1935. So RBI was established as a private shareholders bank. Then RBI was set up as based on the recommendations of Hilton Young Committee, which is a pretty important thing to remember. Then it took over the management of currency from Controller General of Currency. Then it also took over the management of government's account and debt from the Imperial Bank of India. So the Imperial Bank of India is today known as SBI. So let us come into the post-independence era of 1949. In 1949, RBI was nationalized. Let us look into the preamble of RBI. Just like the Constitution of India has a preamble, the RBI also has a preamble. It is like the face of the RBI, or what RBI envisages it to do in the future. So let us look into the preamble. To regulate the issue of banknotes with a view to securing monetary stability. So here it is given as banknotes and not as currency. So just keep it in mind. The banknotes, it has an explanation to it, and we will look into it in the future videos. Then to operate currency and credit systems to its advantage. So we have currency and credit system and we have advantage. So what advantage here means is RBI has certain tools in its ambit. It can control the money market by using those tools. For example, RBI can increase or decrease the repo rate, which can in turn control the market. So this is what advantage means. Then we have modern monetary framework while keeping in mind the objective of growth. So this is here explicitly given in the preamble. So whatever RBI puts forward for the future, it should have the objective of the growth in its background. So that is what it says. Then let us look into the acts administered by RBI. So we have some important acts and we have acts which we have to remember. So the first act, important act, is RBI Act of 1934, which we have already seen here. Then another important act is our Banking Regulation Act of 1949. So this is also a very important act because various banks and non-banking financial institutions and cooperative societies, these are all partly or fully regulated by the Banking Regulation Act of 1949. So we have Foreign Exchange Management Act, which was also an important act. Then we have Securitization Reconstructions of Financial Assets and Enforcement of Security Interest Act 2002. Then we have Credit Information Companies Act of 2005. Public Debt Act 1944. Then we have Government Securities Act of 2006, Government Securities Regulation Act of 2007. Then we have Payments Settlements Act of 2007. This Payment and Settlements Act 2007 has been amended twice. One is up to 2017 and the second one is up to 2022. So after 2022, I think there will be an amendment again. So the last act we have is Factoring Regulation Act of 2011. So these are all the basics and the background for the establishment of RBI. So RBI has a very important board, which is the central board of RBI. All the important decisions are taken by the central board of RBI. The governors and the deputy governors are in the central board of RBI. So let us look into it in a comprehensive manner. The central board of RBI has the official directors and the non-official directors. We have total of 21 directors, in which there is 5 of official directors, that is the governors and the 4 deputy governors. Then we have 16 non-official directors, in which 10 will be nominated by the central government and 2 will be of government officials. Then 4 from the local board. The local board is the east, west, north and south of RBI's board. So from here 4 will be picked to be the non-official directors of the RBI. Then the term for non-official directors is 4 years and the official directors is less than 5 years. So another important thing that we have to remember is for the official directors, that is the governors and the deputy governors, they are recommended by the FSRAAC, that is Financial Section Regulation Appointment Search Committee, and the final appointment is made by the central government through the Committee of Appointments. So these are the things. Then let us look into the role of the central board of RBI. It is general superintendence and directions to the bank's affairs. So this is the role which is laid down in the website of the RBI. Then we have the qualifications. The qualifications for the official directors and non-official directors are not laid down. So saying that even you and I can become the official and the non-official directors of RBI if the central government wants you to be. Then let us look into the important committees under the central board of RBI, because various functions are important functions are done through these committees. So let us look into them. The first important committee will be the Board for Financial Supervision. The Board for Financial Supervision also has a subcommittee into it. First, let us look into the committee, then we will look into the subcommittee. The RBI performs supervisory functions under the guidance of BFS. So the role which is given in the RBI, it is done by the Board for Financial Supervision. Then it is constituted by the RBI Board of Financial Supervision Act of 1994. It has 4 directors from Central Board and chaired by the RBI Governor. So automatically the committees which are chaired by the RBI Governor becomes important. So this is one committee where the RBI Governor is the chairman. Then we have deputy governors are as ex officio members here in this committee. Then it also meets once every month. So this is also important. Then the subcommittee, let us come to the subcommittee. Subcommittee on Financial Supervision was constituted on April 2018. It performs and exercises the power of supervision and inspections under the RBI Act of 1934 and Banking Regulation Act of 1949. So this is what subcommittee does. Then let us look into the second important committee, that is Board for Payments and Settlement System. Authorizes payments system operator. Then it is also chaired by the RBI Governor. So these are the 2 important committees. Then the Central Board of RBI will meet minimum 6 times in a year. The frequency of the meeting of the board is also important, which you have to keep in mind for UPSC prelims examinations or means, wherever you can use this point. Then let us look into the important sections in news. This is a heading which is inspired from the current affairs. So under it we have the RBI Act of 1934 and the Banking Regulation Act of 1949. These sections automatically becomes important because it was in current affairs or in newspapers or in articles. So let us look into it. We have section 7, which says that central government can issue directions to the RBI in context of public interest. Then we also have section 47, transfer of dividend from RBI to the government. We had an issue related to it in the past year. Then section 37 AB, RBI can appoint its officials on board of distorted banks. Then we have section 45I, which says that RBI can cancel registrations of NBFCs. Then let us look into the Banking Regulation Act of 1949. Section 5 says that RBI can recommend center to place banks under moratorium. So these are the important things that we have to know about the Central Board of RBI. I will be attaching the syllabus and the presentation in a document and a PDF format for you to download. And there is more to RBI, and we will be looking into it in the upcoming videos. And thank you for watching.